not why I'm part of Agent Mafia. I'm part of Agent Mafia because I want to help the real estate community become way more versed on the mortgage side of the business. Because I think there's this really big divide where they think that lenders should stay lenders and real estate agents should stay real estate agents. Stay in your lane. I think that's horrible advice. Okay. I think the more a real estate agent knows about mortgages, the better they're going to be in as a real estate agent, and they're going to close more deals, and it makes our lives easier. I mean, are you kidding me? I have a client coming in. They already know that they need a down payment. They already know what their price range should be about. They already know what paperwork they need, and they come at me ready to go because they already talked to the real estate agent. That's a dream come true, right? I don't have to do all the work. I just do what I need to do, which is, of course, pull the credit, structure the deal, write the letter, and of course, take the loan and process it whenever it's time, right? I mean, to me, if I didn't have to answer questions about mortgages because my referral partners are so well versed on it, that would be a dream come true. Not saying that I need to be replaced and not saying that I don't want to work, but let me do what I need to do, which is the loan, and you can handle the actual selling, right? So I think it's okay for clients to know, or not clients, mortgage real estate agents to know about mortgages. I think it just makes for a better conversation, anyways, and a better understanding. I mean, I think the more real estate agents know about mortgages, the more they can empathize with us lenders, and we just have a more synergistic, more chemistry type relationship, right? So, yeah, I mean, I think it's okay to basically kind of think on the same level, right? But again, I have nothing to sell. My goal is just to make sure you guys know as much as I do about mortgages, so you can go close more deals. And that way, if you ever meet me in person, you can high five me and say, "Hey, Larry, because of your class, I closed more deals. Thank you very much." That's my goal. Okay,
That's awesome.
um, you gotta make a move. For those of you who don't know me or are new to this call, my name is Larry Lee, and I am one of the official coaches here at Agent Mafia. The Godfather himself, Brad Vanderwall, calls me the Lone Boss. I hope to honor and live up to that title. Okay. Today, we're going to talk about top secret mortgage tips to turn more leads into buyers. Now, I know that doesn't sound very sexy, but it's probably sexier than what most loan officers would try to teach you on a call like this. Okay. Being in the mortgage business since 2015, and after working with and talking to hundreds of different real estate agents, I have come to realize that most of you guys do not have a battle plan mapped out with a preferred lender partner. Basically, you don't have like a system or a process or a strategy that you focus your energy towards with a particular lender, right? You convince a buyer to work with you as their real estate agent, and the next step is to get them pre-qualified. So you give them possibly three names of lenders you may or may not even like, and you pray that the buyers are able to buy a house, and you won't really know until you eventually and randomly get an email from one of those lenders, right? But that's what a lot of real estate agents seem to do, right? Or maybe you do take it one step further and you uh, let lenders that you referred someone their way, and they may get a phone call from your buyer, but there's no real warm handoff. You don't give the lender their information. You just tell them, "Hey, I just wanted to let you know I referred someone to you. You should be expecting a call. Their name is John," right? Or maybe you are actually definitely trying to make an intentional effort to protect your pipeline by doing a group meeting, a group call, or a group email, maybe like a group text, and you introduce your future buyer to your lender partner, almost in a very "here you go, let me know when they're ready to make offers, good luck" type of fashion. It's like you're just passing the baton to the lender, and you just kind of pray, right? This calls to show you that perhaps the most important part of the buyer's journey or experience, the decision to work with you as a real estate agent, and the dreaded handoff to some random lender that you, the agent, vouched for, is the most underrated, underappreciated, and underrespected, in fact, disrespected part of the entire buying process. And on this call, I'm going to offer solutions I've developed with my own referral partners on how to solve for this lack of effort, thought, and honestly, awareness. And with these strategies I offer you to today, you should convert more on the fence buyers, get more referrals, and ultimately close more deals. This will set you apart from other real estate agents, put you in a position of power and advantage, and make your life a whole lot easier while increasing your GCI. And most importantly, serve your clients at the highest level possible. About me, I'm a certified veteran mortgage advisor. All that really means is I took extra time and energy and money and invested into learning more about the VA loan so that I can be certified to help veterans. Not that it's the only loan that I do, but I believe it's the most underserved and honestly the most misunderstood loan out there. And I just wanted to make sure I serve veterans at the highest possible level. But I apply the same passion and efforts towards any client I work with. Okay. I've been in the mortgage business since 2015, but I've also been in social media marketing coach since 2018. I kind of go hand in hand. I know it sounds like it's two different ways of thinking, but we're in sales and marketing, so it's me just doing what I normally do anyways. But I actually was able to get to the point where I could coach and train and support other people, including my referral partners, on how to grow their social media marketing. Okay. I've spoken in front of or trained tens of thousands of real estate agents. So this is something that I really like doing, and it's kind of a daily thing that I like to do, right? In fact, I run a weekly coaching call, Q&A session, as you would call it, with thousands of real estate agents that um, subscribe to it. So that's a little bit about me. Okay. So the question or the problem that most agents and loan officers have while trying to convert is, how do I convince someone to move forward and choose me? What I mean by that is you're either speaking to leads or referrals or people that you've met that you know that there is a realm of possibility that they're going to buy a house. What you want to do is you want to, of course, number one, convince them to use you as their real estate agent. But of course, number two, to actually take action, right? Now, you don't want to rush them and push them, but you want to be sure that they know everything they need to know in order to make a very fully informed and intelligent decision. And of course, we all know now is always the best time to buy, right? So if they're ready, if they can afford it, then they should actually be shopping, at least be pre-qualified, right? Um, but the one thing that a lot of us loan officers and real estate agents are worried about is, are they going to work with me? Will they work? Will they choose me? Because of course there's a lot of competition out there. They might or actually know several real estate agents or loan officers. They might actually be related to loan officers or real estate agents. Okay, but I actually address concerns that most buyers have and use that concern as an opportunity to convert them to work with you exclusively. Okay, most buyers want the best interest rate. We can all agree to that, right? But they don't know how to get it. They don't have a clue on how to get that. Okay. Most buyers are also concerned about their credit or credit scores, right? I would say a vast majority of people do not have perfect credit, right? And even the ones with perfect credit don't know if they have perfect credit until they actually apply, right? Not all of them, but some do. Okay. Most buyers want some sort of incentive or discount or some sort of financial advantage on work on who they choose, right? Happens to me every single day. What's your best interest rate? That's literally the question. That how do I make sure that I'm going to get the best deal with you? That's literally what they're asking, right? And I'm pretty sure your real estate agents encounter the same kind of conversation when you're talking to a potential buyer, right? And most buyers have questions about financing and mortgages. Let's be honest, right? I'm pretty sure if you're talking to buyers, financing or mortgages comes up in the conversation most of the time, right? So again, these are the problems I think most agent loan officers have while trying to convert. What I want to do today is I want to show you how you can make lenders fight to guarantee the best rate in any market. I'm talking about the 2021 market when interest rates were in the twos and threes, and the market that we have today where rates are in the actually I would say the rates in 2022 where the rates were in the sixes and sevens, and now they're starting to come down, right? So right now we're actually at a point where we can actually remember three different markets in our recent memory. Okay, so I'm going to show you how you can guarantee the best interest rate for your clients in any of those markets. Okay, also I want to show you how you can offer your future clients possible increases in their credit scores. Okay, again, leveraging lenders to get credits towards your clients' costs. Because again, um, so Sonia asked, are you going to talk about VA loans or every loan? I'm going to talk about the general relationship between a real estate agent and a loan officer and the buyer experience. So nothing specific in terms of loan products. Okay. But of course, if you have questions about the VA loans, I hopefully am qualified enough to answer the question. Okay. Excuse me. So again, I'm going to show you how to leverage lenders to get credit towards your client's costs, because who doesn't want free money, right? Especially clients who are thinking about buying a house. Okay. Um, and of course, I'm going to show you how to get instant answers to most mortgage questions. And when I say get instant answers, I'm talking about holding your loan officers and your lender partners accountable, and then finding other resources if they fall short. Okay. So again, the first thing I'm gonna talk about is how to make lenders fight, right? And this is something that I can literally attest to you that I've done this multiple times and it works every single time. Okay. Whenever you have lenders fighting for a client's business using rates or whatever you want to call it, there's always some sort of victory or benefit or gain for the client. Okay. So it sounds like it's more work, but it's totally worth it if you do it correctly. Okay. Story time. I've actually saved a buyer over $8,500 in interest rates by helping them negotiate the rates with their current lender, and I didn't even get the loan. Okay, so what I mean by that is I had a client who was asking me what my rates are going to be, and of course I already knew that they had another lender and knew what that other lender's rates. So that I had a better interest rate, not with discount. I mean purely a better interest rate, a better deal, right? And I screenshot the deal, right? And I sent it to him. And he goes, wow, that's amazing. And I go, yeah, if you go this route, you will save $8,500 because of their rate versus my rate. This is the difference of interest you would be paying, right? And they asked me, well, should I just go with you or should I go with the other lender and tell them what you can do? And of course, me being, I had two people on my shoulder. I had the angel and I had the devil, right? The devil was telling me, tell them to go with you, just lock it up, lock it down. Who cares about the lender? That's what the devil said. But the angel said, no, you want the best interest for your client. You want to help everyone out. You want to be fair. Tell the client to go ahead and let the other lender know what you can do and give that lender a chance to match or beat it or whatever. That way you do officially give the client the best opportunity to get the best rate. So I went ahead and said, go ahead and show my screenshot to your other lender and see if they can match it. If they can't beat it, if they can't match it or beat it, then obviously you know who to go with, right? Well, lo and behold, that lender was able to match it, right? And of course, because the client already had their loan in process, they already had appraisals going on, they already knee deep on the process. They decided to stick with them. The ironic thing was I was able to beat it the next day because rates got better, but they still stuck with the other person. That's another uh, thing that I would want to complain about later, not on this call, right? But I still felt great because I helped that person save $8,500, right? And it's a veteran, okay? So I felt like I did the good deed for the day. And it sucked that I didn't get the deal, but I still get the opportunity to help that client ultimately, and that's all that really matters, right? And honestly, I slept really well that night. Now, this person, of course, promised me that they're going to refinance me, and they actually introduced me to their entire company. I talked to like 5,000 people in their company on a Facebook group because of the help that I provided. So it all came back, tenfold, right? But the point is, I did this knowing that I might risk losing this client, but I did it because I wanted to. Make the best situation for them. So how do you do this, right? So what you do is you actually tell your future client uh, that, and I'm telling you as the real estate agent, right? So you tell your future client that you have lenders who will price compete for you as a service for free. So you literally, when you talk to this person, it's like, I can get you the best rate because I have a network or partnerships with lenders who will provide you a price comparison as a service for free. It costs you nothing, right? So right there, you're handling the first concern, which is how do I get the best interest rate? Well, you have a system for it, okay? And what you do is you build a relationship with a lender. You can ask them to price compete, and honestly, even though it can be inconvenient, it's an opportunity, right? So I would never get mad if a real estate agent asked me, "Hey, can you see if you can beat this rate?" I think to myself, "Hey, you're giving me an opportunity to win this client over. If I can give a better rate, then I win the client, right?" So that's to me, it's a referral, even though it's already loaded. Like I have to fight for the client. It's still an opportunity that I didn't have before that, right? You have to make it clear with your preferred partner that you're going to constantly call on them and get price quotes, no question asked. What I mean by that is this is the relationship you're building because you're providing a service to your real estate agents, right? So you have to tell them, hey, I'm going to call you. I'm going to ask you for price checks or price quotes because I want to be known as the real estate agent that can get lenders to compete for the best rate. So this lender has to be basically on the same page. They have to be willing to play ball, right? If you need to, or if you want to, you can always do this, but you can tell the story where I
I have
saved
a
85.
question.
Yeah, go ahead. Go ahead. I'm sorry.
So, just to understand the terminology better, when you talk about fight for your client, you are the loan officer and you're gonna fight with the lender. I mean, the bank that's gonna give you the money. Is that what you're talking about, right? You are the loan officer fighting with the lender, the big institution that's gonna give you the money.
What I'm saying is that you get two loan officers to compete against each other, right? So let's say you have your preferred lender, right? And I like to use builders as an example because this happens to me all the time with builders. Let's say you have a client that wants to buy a new construction, right? And the builder provides them a interest rate quote, whatever, right? You say, hey, listen, the builders offering you a great incentives, they're giving you a great rate, but let my preferred lender fight to see if they can get you a better rate. And if they can't get you a better rate, at least they can tell you that you got a great deal. And worst case scenario, the lender, my preferred partner, can tell you what they can do, and you can actually bring that to your builder lender and try to get them to negotiate a lower rate for you. So no matter what, it's a win-win situation. Either one, you know you got the best rate possible because a lender actually fought to try to give you a better rate. And number two, if the lender that you introduced to the client has a better rate, then they have options to save money with you because of your efforts, because of your connections and the system that you built. So the goal is to literally provide a service to get the best rate possible for your clients, and you're the middleman. You're the one that's setting it up, right? That's kind of the point of uh this strategy. Does that make sense, Sonia? She says
It
thank you.
does. Thank you. It does.
No problem. Yeah, and the reason why this is a sort of a weird, complicated, because you're asking lenders to work for free, right? I constantly work for free for my referral partners. I constantly get a phone call. Hey, can you beat this rate? This client's doing this, whatever. And I say, send me the rate sheet, whatever. Send me the loan estimate, whatever, and I'll take a look. And I constantly price them, and I'll tell them whether or not I can beat them or not. If I can beat them, then hopefully I get the deal. But if I don't, it doesn't matter. I'm serving my referral partner. They're trying to make themselves look better by providing a service that most real estate agents cannot provide, and they stand out because of it. And I'm a part of that. So I'm all about it, right? Even if I don't get the deal, I want to empower my referral partners with the ability to provide the number one thing people are looking for, basically, or honestly, the best interest rates. Okay, so I'm telling you to create a system behind this, not just randomly do it. Make it happen every single time, right? And sell that as a value add when you're trying to convince people to work with you. Okay, so, like I was saying, you can tell my story. Like you can say, "Hey, I know a lender." You can say, You work for me, whatever, doesn't matter." I know a lender that saved $8,500 on one of my clients, right, by doing this strategy, right, and treat it like a free service you provide for all your clients. Make it seem like that's part of your process. Hey, if you work with me as a real estate agent, I can provide you a free rate quote competition between different lenders. You have a lender, okay, well, let me see their rate sheet. I have a lender that will actually try to match it or beat it, and then you have options to choose different lenders because of rate, right? So you just provide options. Okay, again, most people want the best real estate, the best interest rate, but they don't know how to achieve it. You're providing the how. Okay, so I've actually had lenders, literally had lenders call me on the phone and ask me, why would I coach real estate agents on how to do this? Right? They're like, why would you do this? Why would you make it harder for yourself? Why would you voluntarily tell them to fight for a better rate with you? Right? Like basically telling people to shop you. They don't have an abundance mindset. Okay, they don't have a give and service mindset. To them, they feel like this is a zero sum game. If they don't get a deal, then they're going to miss out. The way I look at it, the more you give, the more service you provide, the more opportunities that you create for yourself, the better for everyone as a whole. Okay. So that's why I do it. Okay. But I actually was once called crazy by another lender because I showed my rate sheet. Like I told you the story, he literally said, "I don't believe that other lender actually showed you his rate sheet. That's crazy." Right. It's almost like we're showing you, the back of the warehouse, right? Stuff that you're not supposed to see, right? But it was an effort to negotiate a better rate for them. Okay. So again, you want to have two lenders set up. One can be your preferred lender partner who's willing to be a sacrificial lamb, and that's really what they become. Like again, I've actually became the guy that would just do the work and not get the deal. Why? Because I want to be able to honor what my referral partners say. I can get you a competitive rate quote. Okay, that's the point, and why you need to find a lender who's willing to do that. Okay, I believe it's okay to tell every lender, whether you're talking to your preferred lender or the lender from the builder. I think it's okay to tell every single person that you are shopping for the best rate. I think it's okay to let them know that because it makes us all put our best foot forward. We don't play games, right? Like if you say, "Hey, I want to get a rate quote from you, but I just want to let you know I'm not talking to other lenders about their rate quote." By doing that, you're going to make that person fight for your business and do the best they can. If they decide not to fight, then you don't want to work with them anyways because they're not willing to help. They're not willing to try to give you the best service, best rate possible. Okay, so I think it's okay to let everyone know. Okay. So what you do is you get your client to get a locked loan estimate. They have to be under contract, of course, right? So once your client's under contract, you get a locked loan estimate from lender A. Let's say you have your preferred lender and then you have the builder's lender. And let's call the builder's lender lender A and your preferred lender lender B. So you ask the builder to provide a locked loan estimate. Once you get the locked loan estimate, you send it to lender B, your preferred lender, and ask them to beat it. Okay. If they can beat it, then obviously you lock with lender B and you go with them, right? And of course, it has to make sense financially, right? If they can match it, well, then you have to decide. Well, it's not beating it, but it's matching, and I'd rather you work with my preferred lender. You can decide to lock if you want. It's your choice, right? And if they like the other lender, maybe they will lock it. But if they're like, I'm okay with the builder's lender, then of course that's okay. But you still have that lender, lender B, around just in case so you can relock a lower rate. What I mean by that is it's happening right now. Rates can drop and will drop during your career. Okay. So rates were in the six and sevens in 2022, right? Towards the end, it started getting closer to the low sixes. Okay. So I'm in a situation, this exact moment right now, where someone locked with a builder lender for a higher interest rate in December, and now rates are lower in January. So I'm actually locking them at a lower rate. Okay. Because I before I couldn't beat it because it's a builder. They have like crazy incentives, right? So I couldn't beat it in December, but now I can beat it in January and they're locking and they're going with me because I was floating. And this is the strategy I'm telling you about. Is even though that second lender may not be able to beat the lender A's locked loan estimate, the fact that they're around, they can float, waiting to see if the rates are going to go down. And if they do, well, then you have the lender B requote, and if it's a lower rate, then you lock it, and now you jump lenders, right? And it may take more effort. There could be some delays, but a good lender should be able to handle it very smoothly. Like we close our loans average 21 days, and that's including builders in 30 different states. Okay, so we have no issues closing really fast if we need to. 7-day closes are normal, especially if there's already an appraisal and such, right? So it depends on the situation, but we can close loans fast if we have to, right? So you want to work with a lender who not only is willing to do this, but also can do their job properly. Okay. So yeah, this is the secret sauce, right? Having a floating lender, meaning they're not locked, willing to be the sacrificial lamb and will guarantee a low rate just in case rates were to drop and the clients are stuck with a higher lock rate with the lender A. Okay. Um, you really should demand more from your preferred lender partners. Okay. They should be willing to do this every time, even if they don't get the loan, because your business and your clients should be the top priority to that lender. Okay. The way I look at it, the more I support my referral partners, the more business they're going to do, the more opportunities I'm going to get. Okay. So I don't mind fighting for or competing for the client's business. Again, it's an opportunity. Okay. Bonus tip, APR is the most important number, not interest rate. Okay. A lot of people don't think about this and they kind of get distracted by the interest rate conversation. A lower rate could be a result of buying down the rate using discount points. So let me show you what I mean by that. Okay. So this is what a locked loan estimate looks like. Okay. Page one. This is what you're looking for. The rate lock. Okay. It has to say yes. And then there's going to be a date, right? So this is what you're trying to achieve from lender A, right? Now, again, you want to focus on APR. Okay. Why? Because even though the rate might be lower, they might be buying it down using discount points. So in actuality, it's a lower rate, but it's actually costing the client more. Okay. So in this case, this person is paying 0.25% or $405 for this lower rate. Okay, this is a discount. Now this is actually not that expensive. I've seen how you call it discount points that were in the thousands. Okay, but the reason why it's important to focus on APR because it's your actual cost over the long term expressed as a rate, and it's on page three. It's literally the page that no one looks at. Page one, page two, and page three. This right here actually tells you how much the loan is going to cost you. So there's been instances where I was working against a competing lender. They had a way lower interest rate than I did, but their APR was a lot higher than mine. It's because of discount points. Okay, so you got to focus on APR, not rate. Okay, and I'm not sure why this thing keeps popping. Sorry about that. So again, focus on APR. It's the most important number. Um, they a lot of lenders try this bait and switch method. Okay, I'm not going to name any names, but you probably know some of these lenders who will show a very low rate, but there's a discount point, and they don't really do a good job of communicating that there's a discount behind it. Okay, so again, APR is always on page three of the lock loan estimate. Okay, so interaction time. Anybody have any experience in this type of method or strategy with their referral partners? Anybody willing to share their approach or any ideas from what I just said, or any questions? Actually, Sonia has a question. So does my client has to apply with a loan for my second preferred lender? Yes, that's the only way it can happen. Again, I know it sounds like it's more work, but if you can save someone $8,500, isn't it worth it? Right? And don't you think you'll get a lot more referrals because you took the time and effort and you coach them step by step on what to do, right? So yes, it
Yeah.
could possibly take more time and they actually can create delays. I'm sorry, go ahead.
I have a, yes, I agree with you. I have a question for you. I'm working right now with a buyer, and
Mhm.
they got the pre-approval letter, and they gave us a sheet with the all the numbers breakdown. Okay,
Mhm.
that one is not locked LE. It's not. It's just it's not locked. It's just loan estimate. You know what I mean? That sheet.
Mhm.
So, is that one the different one than this one you're talking about?
So I'm going to show you what the log loan estimate looks like. This is what you're looking for. It's literally the same document across the board for every lender, at least in the United States. Okay. So if this is not what you can go with, okay, a lot loan estimate is a very official documentation. Okay, it says loan estimate at the top. It actually says save this a loan estimate to compare with your closing disclosure. It's it's across the board the same for every lender using Fannie and Freddie loans. Okay, so if this is not what you're getting for your client, then that's more than likely like an itemized fee sheet. That's something that can be created using PDFs or whatever. It's not an official disclosure. It's literally something that the lender can print out from their system. What I'm showing
Oh,
you,
gotcha.
yes,
So what do I need to do then to get exactly this one? Because what I got, it's not like yours, you know. It's like a sheet. That one side the sheet shows some numbers, the other side shows another numbers. I didn't get this.
you literally have to be under contract, right? And
Mm.
this is part of your initial disclosures. Okay. Uh, I want to make it very clear the mortgage business is a disclosure business. We have to literally be transparent with all the information that we're providing you. The loan estimate is one of the largest or most important disclosure sent out to your clients, right? So they made sure it was a standardized form so that it's easy to compare. So what I mean by that is if you got one from Bank of America, one from Wells Fargo, one from me, one from uh, uh, you know Quicken, they're all going to look exactly the same. Okay, that's the point of that is so that you can literally look at it and compare apples to apples, right? So that is something that is sent out at initial disclosures. So basically, when the loan is ready to be started, is when this sends out, and they don't start the loan until the client signed this, right?
That's right.
So yeah, so that's what you need to get, right? The itemized fee sheet, no, that's not real. That's, I mean, it's literally toilet paper, okay? Because they can
Okay,
change that, they can change it however they
but
want.
yeah, but the only time that I'm gonna be able to ask my lender, my loan officer, to try to negotiate better or ever terms, it's when we are under contract, right? Before that, I cannot do that.
Yes, you cannot do that beforehand. At that point, it's all advertisement. Okay, so
Gotcha.
the strategy I'm showing you needs to be done when you're under contract. So you're literally going to have two loan officers fight. Okay, like I said, fight. They both have the contract. Okay, they both have the contract, and they cannot order appraisals until the paperwork signed. Now, of course, there's exceptions, whatever. But the truth matters, you're basically setting out a bid. You have two lenders setting out a bid, and the only lender that's going to work is the lender that you sign disclosures with. Okay, so what you do is you say, "Hey, Mr. Lender A, I need, I want to lock my rate. What's the rate right now? Okay, I'm going to lock my rate right now. Okay, please send me disclosures, right? Initial disclosures, and they're going to send you this as part of your disclosure. It's going to say rate lock, yes. Okay. This is the sheet of paper. It's a 3-page document. This is the sheet of paper that you need to get. That's why I make it very clear. Locked loan estimate. Okay. So you need to get this, and then you take it and you send it to the other lender. Say, and the other lender is going to know what it is, right? You say, okay, this is the loan estimate. Now the other lender has a chance to literally compare and see if there's any room for them to give you a better deal. Okay. And an honest lender will tell you if they cannot, right? And that's good news, anyways, because you're basically telling your client, hey, you know what? The lender that you work with, the lender you initially decide to go with, they have a great deal. So it's a second opinion that gives them peace of mind. Okay. But it has to be done. And again, this is more work. But the thing is, you don't have to sign both disclosures. You just got to get both of them sent to you, and then you decide which one you want to go with. Okay. And then you proceed with the one that you lock with, right? Or the one that you decide to get to go with the because of the better rate. Okay. Now, do you effectively fire lender A? Well, lender A, you don't need to sign disclosure. You just go, hey, you know what? I actually got a rate quote from another lender that was better, so I'm gonna go with them. But that lender should still be around just in case lender B messes up or something happens or whatever, right? So it's okay to have the initial disclosures out there unsigned, right? Of course, they're going to press you to sign whatever. Worst case scenario, they can restart the loan, but hey, they can still work for you if you're needed. Okay. But in actuality, you basically just chose lender B in that situation. But it's okay to have, again, this is more work, and it's going to upset loan officers. That's why loan officers don't like it when I talk about this. It's going to upset loan officers because they're going to do extra work and not get the deal. But what really matters? The client and them wanting to save money. And because of you as a real estate agent fighting for their best interest, you get the credit for finding them the loan officer that give them a better rate. That's ultimately what matters. Okay. Uh, Hopefully that answers your question, Sonia. Now, Raman asked, does it work
You
for
did.
mixed?
Thank you.
Okay, no problem. So Raman asked, does it work for a fixed rate? Yes, this is a fixed rate strategy. Okay, basically you're getting a lender to commit to what they can provide this client in terms of interest rate, and then that number is no longer changeable because it's locked. Right. That's the reason why we're doing this, because of course, if you can change numbers, then it's going to be BS left and right. I can tell you it's a 4% interest rate, but you're not locking it, so it doesn't matter, because tomorrow you're going to say, okay, I'm ready to go with you. Oh, well, it's 5 now. It's like, what happened? You said it was a 4. Well, I mean, the race changed, things happen, whatever. There's no commitment. And really, there's no truth. You don't know what's the truth. Okay. But a lot loan estimate cannot change. That's solid. That's an official disclosure created by your company, and you must honor it. Right. So you can't change your mind or whatever. So unless of course something happens like your credit gets worse or whatever, but based on the certain situation that you're at right now, it's unchangeable. So that way that person can't play games and try to and mess with the numbers, right? They're committed. So now you're giving the other lender a chance to see if they can hit that target. If it's a moving target, they cannot hit it. You see what I'm saying? That's why it has to be locked. Okay. So yes, it can work on a fixed rate, no problem, Ramen. All right, so looks like we have like 14 minutes, but of course, there's no one else leaving, calling after. There's no one on the call after me, so we can stay longer if we need to. I didn't expect these questions to be that intense, so I'm sorry about that. Maybe I'll plan a little bit better the next call. Okay, so increased credit scores. Again, most clients are going to have concerns about their credit scores because not everyone has perfect credit, right? They're going to think that they can, they might have maybe not enough credit scores to qualify, or they might think, okay, well, my score's okay, but I want it to be better because I want a better interest rate, et cetera, et cetera, et cetera, right? They're concerned because they know it's going to affect them one way or another. So, as a real estate agent, you can actually offer this, and I'm gonna explain to you like through my story what I did. I had a client who applied and they had 700 credit scores, like 720, 730, whatever, right? And I actually did analysis of their credit report and saw that they actually have room for improvement. So I showed them a plan and actually increased their scores to 800. Okay, which based on the interest that they're going to save was like a $25,000 saving. It was incredible. Okay, so I'll actually show you an example of what I mean. But but yeah, I mean it's something that you can offer to your clients. Now you yourself cannot do that, of course, because you're not the lender and you don't do credit pulls and whatnot. But your lenders can do this. Your lender partners can do this. Okay, and if you're working with a lender that does not provide this, you need to switch lenders. Okay, because it's something that we all can do. If they don't do it, it's because either they don't want to, or they don't understand how to do it, or they're just, I mean, they don't have their crap together. Okay. So if you have a lender that's not willing to do this strategy, you just need to switch lenders. Okay. Because this is a very, very powerful tool that can help basically everybody. Okay. When I say basically people with pro credit, you can't help obviously, but you ask your future client, like whenever you're talking to these people, maybe it's an online lead, maybe it's a person that you met, at a PTA meeting, whatever, and they're thinking about possibly buying. If you want to convert them, you can ask them, hey, so what do you think your credit score is at? And whatever number they tell you, right? If it's below a 760, you can help them, or there's a chance you can help them. Okay. So again, you can help the vast majority of these people. But if it's a 760 and above, then they're maxed out and there's not really more room for improvement. But anything below that, you definitely can help. Okay. So after you get their credit scores, you ask them, would they want help to increase the scores? Or would they want to know a strategy or a plan on how they can get their scores increased? Right? Who's going to say no to that? Right? But depending on their trade line balances, there may be room for score increases. Okay. But the only way to tell is yes, you got it. There has to be a mortgage credit inquiry. There has to be a credit pull. Okay. Otherwise, there's no way that someone can. I mean, you can't diagnose someone without actually looking at them, right? So we have to look at the credit. But if you really think about it, and this is how I look at my business, if someone's willing to give me their social security number and want their credit pulled, that's a conversion, right? So they went from someone who is on the fence, not really sure if they want to buy or not, to giving your lender partner their information to pull their credit. That's a conversion. They're actually serious and they're curious about what you can do for them in terms of buying a house. Okay. So to me, that's a close. Okay. So if you get into this kind of conversation, you want to tell your future clients that you work with lenders who have saved other buyers up to $25,000 plus, and you can tell my story. Like literally, you can be like, well, if you are interested in this possible process, I actually know lenders who has actually helped their clients save up to $25,000 in interest rates because of this service that we can provide. Right. So again, you can use my story or my experience as yours, right? When you're trying to literally convince these people to work with you. Okay. So you show your future clients the loans saving calculator and show them possible savings. Okay. And actually, I'll give you guys the link to it. I'm gonna put it in the chat here. But try not to get distracted. I don't want you to look at it yet, but I want you to see what it is, and I'm gonna show you like an example of it, right? So basically, this is what it looks like. It's at MyFICO, and what you do is you plug in information like what's the loan amount, and you tell them what the score is, and it actually gives you what the monthly payment would be, what the total interest would be paid, and how much money they would save or how much more they would spend depending on their credit change. So if they're at a 700 credit score and they got it to a 760, they can save an extra $25,000 in interest. Right? I'm literally telling you to sit down with your client and show them this little calculator, right? Because of course you're talking about credit scores, right? And you're telling them I can help you get your credit scores, and you show them this is what can happen for you if your scores increase. Okay, so you're literally handing them $25,000 if you can help them increase their credit scores. What client would not want that opportunity, right? So again, another way to convert people to work with you, right? Because of your lender partners. Okay. So once you show them this, right, then you refer, and of course, let's say they're down for it. Yeah, I'm excited. I want to see what you can do, what your partners can do. Then you refer your future client to your preferred lender and ask your preferred lender for a free credit plan. Okay, free as in it costs nothing to the client. Okay, emphasize that you can have your preferred lender partner provide a free credit plan to increase their scores. Okay, the lender will have to pull their credit. Again, this is a conversion. Okay, uh, to see if there's any score improvement potential. Okay, now it's based on balances. So if a person has, let's say, two lines of credit going on and they owe 50% on those credit balances, then yes, there's probably room for improvement. But let's say they have three trade lines, but they have nothing in terms of debt. They have no debt whatsoever. Like it's all paid down to zero. Then of course there's no room for improvement there. Okay. So that's kind of the mentality that we're trying to show you. So based on the credit report, I can show the client what they need to pay and how much they need to pay in order to achieve certain potential score increases. Okay. Of course, once this conversation happens, the lender will provide a credit improvement plan to the client, and of course, the expectation is the client executes on that plan. So they do whatever it is that they're supposed to do, right? So this is an example of the results that you can provide. In fact, this is the client I was talking about, how I got them from a 700 to an 800 credit score, 7-ish to 800 credit score. It's going to cost them $4,600 to pay down one account. But if you really think about it, wouldn't you be willing to pay $4,600 to save $25,000? And this is not you buying something or paying for something, that's not expected. This is a debt that you owe anyways. You're going to pay this anyways. All I'm asking you to do is to pay it faster. Pay it right now, right? And if you do, you have a 97% chance of getting your scores to 800 credit score, which will save you in interest rates, which will save you ultimately $25,000, right? This is the conversation I have with all my clients, especially the ones who need credit help. Okay, I try to show them a way on how to get their scores increased so they can save an interest rate or just qualify, because some people don't even qualify. I've actually had loans where the person didn't qualify, they went under a contract, and through my plan, they at the last minute finally qualified because their interest scores were up. So literally, they were not qualified the moment they were under contract. I was pretty uh, stressed during that time, but we made it happen. Okay, but yeah, this is a method that I provide all my clients if they want it, and it's very I think it's a very underrated and very underutilized process. Okay, so the thing is after they execute on the plan, there has to be a rapid rescore, which is a literal request to manipulate their credit report, right? You're basically telling the credit reporting company, hey, this person owed $4,600 on this trade line. They went ahead and paid it. So can you please update the credit score showing the new balances? Here is proof. Here's a piece of paper showing that they paid this balance down, right? So you're asking the credit reporting company to unnaturally update their credit report so that the new balances are now lower than they were originally, and therefore it should show a score improvement. Okay, this does cost money. Like as a lender, when I request a rapid score, it costs me, my company, money to do this, but we do not charge the client. This is free to the client. We're not allowed to charge them. So literally, the client is getting a service that costs money. It costs someone money, but they're not the ones having to pay for it. Okay, it's extreme value, and I think not enough real estate agents and lenders do this. Okay, so there's a lot of people that are paying literally unnecessary interest rates because they didn't do something like this before they got started. Okay, so get in a group meeting with your clients. I mean, get in a group meeting with your lender when the scores improve, obviously, and getting a Zoom call or phone call and share the good news with them. Make it like it's a team effort. Like, hey, guess what? My lender partner and we got your scores to go up another 50 points, and therefore you're going to save $25,000 in interest. Do you love me now? right? Make sure you give me a 5 star on the reviews, right? Whatever you want to say, right? But yeah, celebrate, show that through your efforts and your connections and expertise, you literally increase your scores, which is going to save them thousands of dollars. Okay. So again, the hope is obviously the client sticks with you once they get under contract and your preferred lender as a result, right? You can't force them to, but the fact that you help get their scores up, the fact that you're gonna save them $1,000, they should honor you by working with you, right? But it has happened. I've actually helped people get their scores improved, and they went with someone else, right? Uh, People are people. Okay. All right. So uh, interaction time. Anybody have any experience in this type of method or strategy, or want to share your approach, or any ideas stemming off of what I just presented? Sonia, I actually was licensed in North Carolina. I did the class and everything like that, but I didn't renew it. But my branch is licensed in North Carolina, so we can help. So if you need help with North Carolina deals, we can. My team is the same people that works on the file. We can help with that, and we'll figure it out, right? Um, So let's see here. Oh, also, I forgot to ask you guys if you guys want like these slides or some sort of follow up, you can go and drop your email in the chat, and I'll make sure that I will follow up with you guys. Okay. All right. So lender credits. Now this one is a little bit more tougher, right? So what I mean by that is when uh, when clients are looking to work with someone, of course, they want the best deal possible. They want the best rates, etc. Well, also funds is something that can possibly bend their ear. Okay, so little quick story. I had a referral partner that was struggling to commit to one of their potential buyers. Right, like they just weren't willing to move forward until they offered that client a free appraisal. Right, like okay, if you work with me, then I'll pay for your appraisal. Right, and all of a sudden they decide to move forward and they apply with me. Okay, now that referral partner is running Facebook ads just to promote or advertise this type of incentive, and they're getting a lot of responses, right? So it's weird. $500 or whatever, a free appraisal, all of a sudden your phone's bringing off the hook, right? It's just something as simple as that. Okay, so again, you want to ask your preferred lender partner if they can provide any lender credits towards closing costs. Okay, most lenders should be able to figure something out. Okay, if they can't, something's weird, right? Maybe I don't know. You might want to talk to the lenders if they're like, nope, absolutely not. I will not provide lender credit. I won't do it. Something's going on. Okay. But most cannot offer anything free or anything specific. Like I can't be like, yeah, I can pay for their appraisal. It can't be like that. It just has to be considered a lender credit, meaning a numerical number added. Numerical number is funny. Added or shown on their total closing cost. Okay, and it's going to be a lender credit applied towards final closing cost. Okay, but we can't offer a free appraisal. That's not how it works. Okay. Then you create co-marketing materials explaining the offer and send it to your database and your potential clients. Okay, so here's an example, right? This is a flyer that is approved by compliance with my company, where I have my name here, but I would actually put my referral partner's name here. It literally says first time home buyers, but what do they see? They see get $500 towards your closing costs, right? And they blast this on their social media. They blast it to their email list. They print it out. They make sure it's at every single open house, whatever it is they need to let people know, hey, you're giving $500 off, right? And that might be the one thing that pushes people over the edge, right? So Sonia says, I asked this question today and they said no, they can't do anything. Yeah, see, it really depends. I mean, what I'm saying is you should ask them preemptively, not during a contract. That's already too late. But say, hey, I want to try to incentivize potential buyers. Can you offer lender credit so that I can communicate to them that if they work with me and you, we can get them some money towards the closing costs, right? That's what I'm saying. So your lender probably could, maybe in a future deal, but maybe not in a current deal. Okay. Or if they're not doing it, then again something might be off. Okay. But again, you got to make sure that the advertisement is compliant, right? So once you get that done. You leverage the lender credits as much as you can and bring yourself as the real estate agent with access to lender credits, right? You want to let everyone in the neighborhood know, yeah, there's a lot of real estate agents, but I'm the one with lender credits. I'm the one that have connections that can get you some money towards your closing costs, right? Assign yourself with the incentive because again, people are shopping for the best deals. They're looking for reasons to choose someone. Well, if real estate agent A, real estate agent B look exactly the same, sound the same, smell the same, they talk the same, but one of them is given a $500 incentive, which one are you going to choose, right? So it just gives you a little extra edge. Okay. So once a client shows interest, loop your preferred lender partner in as soon as possible. What I mean by that, if the person says, yes, I want $500 towards my close costs, what do I need to do? That's when the lender needs to be introduced right away because the lender is the one offering it. Okay. So it's something provided by the lender, so they have to explain how it works. It has to be disclosed to them what it means. Okay. We're not giving them $500 cash or a check. No, it's going to be applied to the closing costs. But what's the catch? They have to apply, get pre-qualified, get under contract, and close. That's how they get the $500 credit, right? So that it's a conversation that needs to be had so these people don't feel like they're being tricked or bait and switched, right? Uh, and a good closer, when I say good closer, I'm talking about a lender party that knows how to close deals, will ultimately get the potential client to apply. And like stated earlier, any application is a conversion, right? If someone decides to give someone else their social security number, they're interested in doing business with that person. Okay. So again, this conversation is about getting someone who might want to be a buyer to work with you and your lender partner and ultimately close. And again, I believe the close is when they apply. Okay. So, so yeah, this doesn't work without a lender. Okay, so you continue with the pre-qualification process, contract, and the loan process as normal. What I mean by that is nothing changes at this point. You still go through the motions of getting into a home, a contract, etc. And then if you want to, you can have the lender credit disclose on the loan estimate, but it's not necessary, right? What's necessary is for it to be on the closing disclosure, the CD, the final closing documents. Okay, so this is where when you're about to close, you want to make sure you remind your preferred lender partner to put the lender credits that were agreed upon on the CD or the closing disclosure, right? So maybe you can three-way the lender with your client on the phone, just to say, hey, remember our client, they agreed upon getting $500 credit, 500 towards closing costs by working because of them working with us. And the lender should be like, yeah, you're right. Let me make sure it's on there. Okay, I double checked. It looks good. So when you get their CD, you'll see a line that says lender credit. So it actually looks like this. Okay. On page 2 of the CD closing disclosures, you'll see in category J total closing costs, and you'll see lender credits, and it'll have a negative sign in front of the number. So this lender is giving a credit of $230, right? So again, it's on page 2 of the closing disclosures, item J, and it's has to lender credits, right? Now it's literally easy to find because the calculating cash at close, which is where most people's eyes go to, is the line right above it. Okay, but that's how you prove that you're providing them what you agreed to give them, which is the credit. Okay, but the lender should explain this. You don't have to explain this. The lender should be the one explaining this to the client. Okay. But yeah, again, by doing this, you're showing your client that you have their best interest at heart. You are honoring your promise. Okay. After closing, ask for referrals. Do you know anybody else who would like a lender credit towards their closing costs? Right. So you're not just saying, hey, do you know anyone who wants to buy and sell? No, you ask them, do you know anyone else who would mind saving money on their closing costs? Right. That's how you should pitch them. Right. You treat it like our clients are hooking other clients up with this exclusive incentive. What I mean by that is you're empowering them, the client that you just closed, to give their friends and family a $500 discount. Hey, I just bought a house. Check it out. I know a guy that can get you $500 towards closing costs. Right here, give my agent a call. Make sure you tell them that Sue sent them. Right. So you're giving them sort of an opportunity to look good in front of their friends and family. Right. And of course, when they are referred, you can be like, or you can actually ask the person referred, hey, did you tell them about the incentive? Okay, cool. If you did, I'm going to go ahead and make sure that I can still honor that with my lender. And then, yes, you have to ask every single time with your lender if they can provide this, because there's a chance they might no longer be available. Okay, it's something you have to fight for every single client. So it is something that is exclusive. right? It's not an automatic. It's not guaranteed or something that you should neglect. You need to make sure it can happen, right? But by doing that, it makes you look like a client advocate, like you're fighting for every penny you can for the client, right? Which of course just makes you look better, hopefully, right? So interaction time. Anybody have an experience with this type of method or strategy, or anyone willing to share their approach, or maybe you have any ideas based on what I just explained or presented? Yeah, sorry we're going a little bit over, but hey, most of you guys are still on this call, so that's pretty cool. Okay, so moving on, get lender answers. Okay, so the concern that I talked about, the last concern, which is the most obvious, which is probably the one that we all encounter, is the client literally has questions about financing and mortgages, right? They don't know what they qualify for. They don't know how much they can buy. They don't know what's required, how much down payment they need. They have no idea what their credit scores look like. I mean, they have all sorts of mortgage related questions, obviously, right? Uh, you know, Flowify is the largest or one of the largest mortgage application software, right? So according to them, the number one most common complaint about lenders. What do you guys think it is? You can put in the chat or you can unmute yourself. What do you think is the most common complaint amongst lenders from real estate agents and clients? What's the most common complaint? What do you guys think? Are you guys sleeping? There's a chance you guys all be sleeping. I wouldn't blame you because I'm actually pretty tired too, listening to myself.
I'm here.
Okay, Sonia. So what do you think is the biggest complaint most people have about lenders? You want to venture a guess?
They're not being honest. Sorry. I
They're
don't
not being
know.
they're not being honest.
Honest. Like, like you said, there are ways that they can credit some money, into the closing costs, and they don't do. I don't know why the reason. Some of them, they do not disclose, how much they're making, or they don't want to disclose, you know what I mean? And so many of them tell me, I'm not making any money, but nobody works for free. You know what I mean?
Right,
How can I not be making money?
right. So yeah, so your guess is they're not completely honest or they're not disclosing everything, right? Does anyone else have a guess? What's the biggest complaint people have about loan officers or lenders?
The interest rates, that what they say is not really the factual one because they don't look at APR.
Okay, interest rates. Anybody else want to guess? Okay, so I'm gonna give you the answer. Poor communication or lack of responsiveness is the most common complaint in the mortgage lending process. What I mean by that is the loan officer is just really bad at answering their phones, or they don't answer the questions correctly, or they're just not very, they don't communicate or update often enough, right? So the clients are confused or they're scared because they haven't heard anything, right? So what you're saying, Sonia and Sumit, what you're saying kind of relates to that. It's about literally letting the client and the real estate agent know what's really going on, right? And the reason why real estate agents don't like loan officers that don't communicate properly is if the client has a question about mortgages and the loan officer is just not answering their phone, then the agent is the one that's in the crosshairs. The agent is the one that looks bad. The client's always going to look to the agent if something's going wrong, right? Or there's a lack of response from anybody, whether it's the appraiser or maybe they're working with an inspector, whatever it is that you need. Maybe maybe another vendor of some sort, but whatever you need, if they're not responding, the agent's going to automatically look at the real estate agent as the person that needs to fix it, right? So agents don't like that, right? So uh, what I propose is that I think that most lenders, right, should be available in any possible avenue, meaning they should be available via cell phone, via text, email, Facebook DMs, whatever it is. If you don't have access to all of this for your lender partner, you need to switch lenders. Okay, like if you have a lender that says, "Yeah, I don't give out my personal cell number," that is a huge red flag, right? That means that's a lender that doesn't want to work. Okay, so again, be aware of these things. Okay, every lender is every lender knows that communication is the number one complaint, right? When it comes to them from borrowers and real estate agents. So lenders should actually over communicate, right? Because they know that's the biggest complaint about us. We should make up for it, right? But you need to set fair expectations, obviously. You want to make sure you know your preferred lender's partner schedule and what's expected of them, right? And how long you should expect for them to respond. If you ask them a question, if they send them an email or send a text, you should know that. And there might be things like, let's say they don't work on Sundays, right? So again, if you set expectation, you communicate, you're on the same page. You might tell the client, if the client says, "Hey, I have a question. I haven't heard from Larry yet." You can be like, "Oh yeah, I'm sorry. I should let you know. Larry actually does not work on Sundays. He literally does not have his phone with them. He explained to me that's just the one thing he asked, but he will definitely get back to you on Monday first thing. He promised me that's how he treats all my clients, and hopefully that's enough for the client to feel good about it." Okay. You know, we're human, right? But some lenders work 24/7. Like I'm that kind of lender. Okay. But it's okay to set expectations, right? Um, your lender should actually have a clear voicemail inbox set up and be willing to take direct text messages on their personal cell. So what I mean by that is there's nothing more frustrating to a client if they're calling the lender to ask a question and it gets the voicemail and there's no room in their inbox to leave a voicemail. That's just gonna upset the client, right? But if the client is willing to text after that, then the lender should be willing to take that text, especially if their voice inbox is full. Okay, so if you have a lender again who is really sloppy about their voicemails and they don't accept text messages, you need to switch lenders. Okay, most people use text messages nowadays, anyways. Um, if you want to kind of force your lender to be responsive, this is something that works really well. And I do this already myself, anyways. But you want to set up a three-way text group with your lender, your buyer, and of course, anyone else involved. So let's say you're the real estate agent, you have a buyer, you have a lender that's working on the file for you, right? You should create a group text and say, "Hey, I created a group text so we can update each other." That way, when you ask a question in the group text, the fact that there's multiple eyes seeing the question, it gives pressure to the lender to respond faster. Okay, because they can ghost one person, but they don't want to ghost multiple people. Okay, so it's very smart if you want to sort of keep tabs on your lender to put them in a sort of carbon copy, multiple group text kind of a situation. Okay, and you should have a backup lender. Okay, what I mean by that is someone that you can call upon and and be willing to help answer questions if your other lender is just simply unresponsive, right? I am the backup lender for a lot of people, right? Like they'll be like, "Hey, Larry, I'm working with a client. I know it's not a client that I can refer to you, but can you answer a quick question?" I'll be like, "Yes, sure." Why? Why would I want to do that? Because number one, if I say no, I'm the asshole, right? Oh, you're not working with me, then no, I refuse to help you and your business and your clients. Who cares? Right? No, I would look bad if I say no. Number one. Number two, of course, it's the opportunity just in case something goes wrong with that lender. I'm the next guy in line, right? But also just helping the agent, because again, the agents in the crosshairs. The agents are pressured by their clients to answer the question. They can't get an answer from the lender because the lender doesn't work, past 5 p.m. Or Saturdays and Sundays because they work for a bank, whatever, right? They want answers, so they want to be able to provide that. So I want to be able to empower agents, no matter what, on doing that, right? But yeah, you should have a backup lender just in case, right? Your preferred lender partner should update all parties at least once a week on the loan process. Literally, whatever loan's happening, whatever's going on, whether there's no updates, there should get an update once a week. Hey, just wanted to let you know we're still waiting for the appraisal. It's been a week, but they have 10 days to provide for us, right? That's an update, right? You want to make sure your clients feel like they're not neglected or forgotten, and that the lender is on top of things, right? So you should work with a lender who does this uh, as a part of their business, right? In fact, I actually update multiple times if I have to, right? But once a week is the bare minimum. If you have lenders that don't do that, you're working with the wrong lenders. Okay. In addition to being readily available, right? They should be doing this. Okay. Phone calls are a requirement for any major updates or bad news. Okay. And it should be made within the same day they are informed of the bad news, no exceptions. So what I mean by that, let's say the house is in appraised. Let's say it's a $500,000 house and it appraises for 490, right? So that's not exciting news. Okay. Something has to happen, whether the seller has to lower the price or the buyer has to come up with the extra $10,000, whatever, right? It's not a smooth situation. The lender should call everyone as soon as possible about this. I actually call the real estate agent first, not the client, the real estate agent first. Why? Because if I call the client and the client gets pissed off and calls the agent, then the agent's finding out from the client, and that's not what I want. I want the agent to find out from me. Okay. Because of course the client being emotional, there's a chance that they might actually throw me under the bus. I can't believe we picked this lender. This lender has crappy appraisers. Yeah, you don't want that to happen, right? So I always call the agent first, make sure we're on the same page. We're like mom and dad, right? We're gonna give the kid the bad news. We need to be on the same page. So I call the agent first. I let them know, and then of course the agent, of course, is informed and prepared for a call from the client if they have feedback after I give them the news. And then of course I actually will tell the listing agents as well. Okay, but that requires a phone call, right? Lenders who dodge phone calls or fails to provide updates is most likely afraid to disappoint you or get you mad, right? Like the reason why they're not answering the call because they don't want to address whatever question you may have, or they have bad news, but they're just not ready to tell you, right? They're scared, right? You should call them out on it. Hey, what's going on? Why haven't heard from you yet? Is something wrong, right? And if they do that consistently, that's a lender that you don't want to work with. Okay. And why am I telling you all this? Because I'm telling you, you want instant answers to your mortgage questions. Well, vet out your lenders. If they act like this, you're not going to get instant answers. So you need to just not working with them. That's why I'm kind of bringing this up. And I'm telling you this because I make sure that I don't fall in any of these categories. Okay. So there are lenders out there like this, because I'm one of them, that doesn't dodge phone calls, that makes phone calls when it's time to give major updates. And I update my clients once a week, no matter what. Okay. Clients in the listing agent, in the buyer's agent. Okay. So your lender partner should be already be expecting and be prepared for any and all mortgage questions. What I mean by that is we know our job. We know how complicated it can be, and we know how mystifying the process can be. So it's not a surprise that people have questions, right? So we should be ready for that. We should be prepared for that. It shouldn't come to a surprise to us that borrowers and real estate agents may not know everything about the mortgage process. Heck, we have questions sometimes. Okay. If your lender does not already have a potential confusion, or if they haven't already addressed the potential confusion or curiosity of the borrowers up front, meaning they haven't really did a good job of explaining what's going on, they should make up for that by being responsive, right? Like if they just do a bad job of presenting information, then they should make up for it by actually picking up the phone whenever they get a call from the client. Okay. I mean, it's one or the other. Okay. So, in order to make efforts to get these questions answered quickly, if you do have a good preferred lender partner, is you should ask them to provide answers to typical questions, make it readily available. Uh, not every single loan is the same, but the process and the potential need for communication is very consistent and predictable. Meaning, I have the same conversations over and over and over. I answer the same questions over and over and over. Okay. So I know what questions are going to be asked. So as a lender, you should be able to already address those in an earlier conversation, or maybe provide like a PDF or maybe an email FAQ, of frequently asked questions, um, or maybe a video, right? If your lender doesn't have a resource like this, I actually have one that you can use. Okay. It's larryanswers.com if you want to check it out. This is the URL here, larryanswers.com. So LARY, my name, answers.com. Okay. And it's literally a resource that you can share. Well, you actually might not want to share with your clients because I get pretty raw about it, but you can use it to research. So this is what it looks like. Okay. It's literally a class I created where I asked what I believe is the most typical questions, and I provide an answer for it. So in this case, how do I know how much I can afford when buying a house? And I give an answer, and I'll probably have some PDFs, and I'll have a video explaining it. Right? Sometimes they're 3 minute long. Sometimes they're an hour long. Right? But if you go to larryanswers.com, you get access to this. I have at least 30, 40, 50 questions there, and I'm going to add to it as
Hey,
we go.
Larry,
Yes, ma'am.
it's asking for a code, to get in a class. So I cannot see this. Yeah, I cannot
Oh,
see the
oh, oh.
document.
Okay, I'll add you because yeah, I think give you access to it. So I'll add you as one of the students, and then you'll get access to it. Okay. I have your email. But
Yeah,
if you don't get it, reach out to me. I'll make sure you get added onto. But yeah, it's exclusive. You actually have to be given permission. So I love your
sure.
enthusiasm, though. I appreciate it.
I have a lot.
Yes,
Thank you,
yes,
Larry.
of course, no problem. So again, if you call, text, email, DM, smoke signal, bang on your lender's door and they don't answer, then call, text, email, or DM me and I'll answer. Okay, I'll be your backup no matter what. Okay, the way I look at it, I think there's a lot of unnecessary stress out there, and if I can fix that by just answering a quick question that takes a minute, I'm willing to do that. Right? Even if I'm not doing business with you, even if I'm not even in your, I mean, there's people in Canada on this call. If I can answer the question and it applies in Canada, and I can never do business with them, I don't mind. It makes me feel good whenever I can share my expertise. I told a friend earlier, it makes me feel important. It makes me feel like you respect me because you're asking me questions. So I would love to answer any questions, especially if it's something easy, right? So again, if your lender is just not doing a bad job of responding and you need a question answered right away, reach out to me. I'll do my best to answer the question. And if I don't, then you can call me out on the next call. Okay. Um, so yeah, interaction time. Anybody have an experience of this type of method or strategy, or anybody want to share their approach, or how about ideas? Based on what I just told you guys. It looks like a lot of you guys are still on this call, so I don't know. Maybe you guys are all sleeping. I have no idea, or you're just recording this. Who knows? All right. So, any questions on what we just covered? Sorry, that went a little bit longer. Again, I didn't expect like all those questions. Maybe I'll just shorten it and be prepared for more questions later in the future. But yeah, any questions that I haven't answered yet?
I just have to say was very good, Larry. Thank you so much.
No, I appreciate that. No, and that's actually the next question. What was your biggest takeaway, right? What is your biggest aha moment? So hopefully, if you guys are on this call, you can hear me. Maybe you can share your biggest takeaway or your biggest aha moment from this call. Let's start with you, so since you're there. Like, what was your
Yeah.
biggest, thing that you learned from this call?
Well, I thought, even before you teaching this afternoon, that to ask the lender questions and ask, how can these loan terms can get better, for my clients was I had that in mind, but I wasn't sure how to approach the lender and ask that, even though I did this morning. And he said, no, and we cannot do anything other than this. Um, you just gave me the confidence, you know what I mean, to fight for my client,
Yeah,
you know?
yeah,
Yeah,
and I'll tell you, most lenders they say that because they're too lazy. That's the reason why. They're too lazy to
hmm,
actually. They're too lazy to make the effort. Okay, you get them to work by showing them that you're working with someone else. That's how you get them to work, right? So
exactly. And now I feel confident, and you know what I mean, and I know what to do. I'm gonna follow to the T, everything that you explain here. So I think this class was wonderful. I was tired. I don't think I was gonna take this class, but I said, you know what? I probably need to hear something here.
yeah,
Thank you,
well, I
Larry.
appreciate it. No, I appreciate it. I'm glad that you got something out of it. So anybody else want to share like a takeaway or aha moment?
I
Uh,
could
you know,
go quickly, Larry. I mean, couple of things. So it's funny. I actually just recently passed my safe exam, so safe mortgage exams, and I got my New York license. So I still have to like go through the process, join the mortgage. But a couple of things I found very interesting today was one about the free credit repair thing. I think
mhm.
that's a big value add, like that you can provide the clients. I mean, a lot of these clients don't even know, and neither us as a real estate people, like we don't know about that. So I think that's great. Second, I could totally agree with you. I think like when I'm thinking now, working with the lenders, the communication really sucks. I totally get you, and like we're always put on the hook for that, and completely appreciate that. That yeah, kind of like I was just looking at from my angle, like if I'm going to be also working on loan, I took your notes, some of the notes down, like following a weekly, and I think those were like really helpful.
Awesome. Well, congratulations on passing the safe exam. That's not an easy test to
No,
pass.
my God, it's not. It's
Yeah,
yeah.
I know people that took it 3 times and failed it every single time, right?
Oh
Yeah, and now they're done because like you have to wait like 6 months after the third time you fail it. So they're like, I'm not going to be a loan officer, right?
wow.
So yeah, congratulations on that. And yeah, you know, I love helping other loan officers. In fact, I teach classes for loan officers as well. So if you have any questions about like how I do business, I mean, I'm not saying I'm the best, but I'm really willing to. I'm open to share, you know, my experiences and my strategies and whatever. So yeah, reach out to me anytime if you have questions about mortgages and how to approach the business. Okay.
Sure, Larry. I'm gonna take that offer. I mean, what's the best way to reach out to you? Because I'm definitely gonna reach out to you about this, man.
I actually have. I'm gonna show you right now. This is my
Oh, awesome.
information. Right? They say that this is not a pitch fest. We're not supposed to sell anything. I don't have anything to sell, right? I literally have nothing to. I mean, I have coaching products and stuff like that, but that's not why I'm part of Agent Mafia. I'm part of Agent Mafia because I want to help the real estate community become way more versed on the mortgage side of the business. Because I think there's this really big divide where they think that lenders should stay lenders and real estate agents should stay real estate agents. Stay in your lane. I think that's horrible advice. Okay. I think the more a real estate agent knows about mortgages, the better they're going to be in as a real estate agent, and they're going to close more deals, and it makes our lives easier. I mean, are you kidding me? I have a client coming in; they already know that they need a down payment. They already know what their price range should be about. They already know what paperwork they need, and they come at me ready to go because they already talked to the real estate agent. That's a dream come true. Right? I don't have to do all the work. I just do what I need to do, which is, of course, pull the credit, structure the deal, write the letter, and of course, take the loan and process it whenever it's time. Right? I mean, to me, if I didn't have to answer questions about mortgages because my referral partners are so well versed on it, that would be a dream come true. Not saying that I need to be replaced and not saying that I don't want to work, but let me do what I need to do, which is the loan, and you can handle the actual selling. Right. So I think it's okay for clients to know, or not clients, mortgage real estate agents to know about mortgages. And I think it just makes for a better conversation, anyways, and a better understanding. I mean, I think the more real estate agents know about mortgages, the more they can empathize with us lenders, and we just have a more synergistic, more chemistry type relationship, right? So yeah, I mean, I think it's okay to basically kind of think on the same level, right? But again, I have nothing to sell. My goal is just to make sure you guys know as much as I do about mortgages, so you can go close more deals. And that way, you know, if you ever meet me in person, you can high five me and say, "Hey, Larry, because of your class, I closed more deals. Thank you very much." That's my goal. Okay.
That's awesome.
So yeah, that's my information. You can call me. My cell number is the best way to text me. You can find me on Facebook. I think I gave the link. It's the Larry Lee. So Facebook/the Larry Lee. My link tree has like all my information. And of course, if you want a resource to the answer thing that I have, LarryAnswers.com. Right. But yeah, I mean, I have nothing to sell except for, I don't know, if you want to do business, if I can help you with your clients, I mean, I would love that. But there's no expectation because because I don't know who I'm talking to, you guys. I mean, a lot of you guys are in Canada anyways, right? So it doesn't matter. But yeah, I really appreciate you guys being on this call. If no one else has any questions or takeaways, I appreciate you guys being here for another 30 minutes. Hopefully I can shorten the class so the next time it does close in that 1 hour time slot that I'm supposed to close. And again, I will talk to you guys later, and I appreciate you guys being here. I'm out.
Thanks, Larry.
Thanks, guys. See you later. I'm going to make sure I get all your emails, okay? All right. I'm out. See you guys later.
Hey guys, thanks for watching this video. If you did enjoy it, please do us a favor and hit the like button below. That way we tell the YouTube algorithms that people like yourself should be watching this video. And if you do want to see future videos, please consider subscribing and hitting the notification bell. That way when we create new content, you'll be the first to know. Also, you can probably see related videos to this video over here, somewhere in the screen that you can click, or somewhere in the comments. Either way, we appreciate you guys watching. This is Larry, the Mortgage Guy, your mortgage insider. I'll see you in the next video.